Despite all the doom and gloom, there were a few surprising bright spots in the week in this market. Bob Pisani is at the New York Stock Exchange with a look at them. Hey, Bob.
Hello, Melissa. There weren't a lot of bright spots, but we just love Motown here. So there were a few, including retailers like Abercrombie and Buckle and Burlington. They were all up double digits. Gap was strong as well. Macy's was up fractionally on the week. Then we had the automotive stocks. My heavens, we saw a whoosh of buying in the last 2 days. Everything from Group 1 automotive. GM and Ford moved up mid-single digits. That's amazing. The home building stocks, this is another group that's had the stuffing beaten out of it, had a comparatively strong week as well. We had good earnings from Pulte helping. We had Toll, we had Lennar, we had D.R. Horton, all into the green. Volume has been especially heavy in the home building group. It's down about 20% a month. In fact, they were buying home builders like crazy at the bottom of this morning. The volume was huge, and that has a lot of traders complaining. Why? Well, because traders want to see a tradable bottom. That's what they want. When is it going to be over? And they don't see the signs of it yet. They think the sentiment is still too positive, a lot of them, and they point to the huge rally we had today. You know, the S&P rose 60 points in the middle of the day. What? The conventional wisdom is the economy is good. A lot of these stocks are oversold and washed out, and it's time to buy them. Well, these guys, they want sentiment to be a lot more negative. They want the VIX much higher, if not in the 50s like it was in February, okay, at least in the mid-30s or higher. That's why most traders I talked to today felt that today didn't settle anything, that it was an indeterminate day, and I'd have to agree with them on that one. Have a good weekend, Melissa.
You know, Bob, one question here on the home builders. The traders are upset because there was heavy volume on the upside in the home builders, and we didn't see that whoosh to the downside in terms of capitulation.
They want even more negative sentiment overall. They think people are now picking bottoms on the most beaten up groups. Like I said, just with the home builders there and the automotive stocks, and that they're still too generically positive. Okay, they're a little washed out. Now let's buy them.
Right.
They want nobody interested at all.
All right, Bob.
I don't know if we're going to get that.
Yeah. Have a great weekend. It's been a long week. Bob Pisani at the New York Stock Exchange. You've been in home builders.
Yeah.
Are you also disappointed about the action here?
No, I'm going to say that I'm okay if there wasn't another swoosh. It's down. Lennar's down 33%. It fought back. It was down 38% beginning of the week or so. I do think that you're going to get a shot in Lennar. Just think about it. If Lennar gets back to middle 50s, think of that percentage move that you're going to get going into year end. That's where you're going to get your beta chase, Ford as well. But all the home builders are really ripe for substantial bounce.
Home builders, automakers, retailers, any of those convincing to you in terms of where to find value here?
I think that, in my opinion, the home builders bounce because rates have actually gone lower over the last couple of weeks. I think that's part of it.
Lumber costs have gone down. That was one of the major headwinds. Sorry,
but I still think the trend is still lower there. Autos maybe. Tim, maybe we finally caught the low in Ford, but I still say you fade the autos as well.
To me, retail, I got to tell you, I actually feel very confident on retail. First of all, the XRT, after significantly underperforming the S&P kind of until the last few days, has now outperformed the S&P in the last couple of days. We're a few weeks away from Black Friday, which apparently I don't even know when Black Friday is anymore. There's no Black Friday because we start early.
Good point, BK.
Oh, yeah. No, but bottom line is, think about what retailers have done in the last year. First of all, they're outperformed the S&P by about 1,000 basis points over the last 12 calendar months. Most of that is this outperformance that we saw off of expectations in the holiday season, which last year, granted, weren't great. I think the expectations for this year, no matter what the macro is telling you, the consumption story is alive and well. And I think that in the discretionary consumer name, you still have some value. Value has been created, but these aren't bombed out because they're structurally broken anymore. These are companies that actually have been pulled back with the broader market. I like retail here. That's where I would
Unless
play.
you think what Amazon's saying about its revenue growth in the fourth quarter is indicative of
everything
retail.
else.
Amazon's
right.
But go ahead.
Well, I would say if you buy that, or even if you're looking for a trade here, take a look at Home Depot. Traded down to major support today. If you're going to get that turnaround and you're looking for a tradable bottom, I think that might be the place. Plus, you know what your risk reward is, right? Today's low or this week's low is what you use as your stop.
What was interesting today was also, not just today, this week, the bounce in Tesla that we've seen. And then today, it fell off, right, when that headline crossed about an FBI investigation deepening. And then the stock came back after all. It finished the week higher by 20-something%.
That was the most impressive thing, the fact that it bounced, it came back from that headline on a Friday after having this move to the upside when it gave everybody the opportunity that wanted to sell the stock. And you know what? Maybe they did, but it came back. We asked Gene Munster the question the other day. But for Elon Musk's tweet about funding secured, would Tesla be north of 400 right now? And I think he said yes. Now, quite frankly, I've said it 5 times now. I'm backwards on this one, so I don't know. But I tend to agree with Gene.
Can you think about how many funds were short Tesla and long Amazon? Imagine that trade coming off, what it's going to do to stock prices at this point. So when you see the Tesla bounce here, a lot of it is short covering as well.
I realize that the short interest in Tesla is high, but I don't think that that's a trade that a lot of big hedge funds have on. I think there are a handful of noted ones that do. I just think Tesla trades in its own stratosphere.
Yeah.
Think about this. Tesla significantly underperformed the NASDAQ or the triple Qs for a couple of years. What's been happening over the last 3 months has been totally a Tesla story, good and bad, whatever it's going to be. So what you had this week is a company showing that they're actually generating free cash flow, may not have to borrow, may not have to raise money. We've forgotten at least about the concerns from the DOJ or the SEC, even though those things are still absolutely there. So for the right reasons, for fundamental reasons, Tesla did what it did this week. And I don't think Tesla is in any way going to be a beta stock for the overall market.
Outside of these bounces this week, BK, where does BK go to look for opportunities?
Where does BK go?
It's really, I still think it's a bounce market. I mean, the problem I have is we have earnings that haven't been great. The GDP print today was not great when you look under the hood. So I think at best you have is a bounce market. I think you can look at the home builders like Grasso likes. Again, Home Depot is something I look at. I would even look maybe, and I'll give you a hint of what I'm going to talk about later, but maybe the bond market.
Come on.
Interesting.
That's
What a
nice
tease.
is what they
Nice
call in the
tease.
business.